Hey, Matt Noren at the Community Workbench. I proudly sponsor the Community Workbench and everything that it represents for local entrepreneurs. And speaking of which, I am a local entrepreneur. I am a realtor with Remax Bell Park in Hayville, Connecticut. Fully licensed in Connecticut to do commercial, rentals, and residential. I absolutely love my job, love working with clients. So if you are in any need for a realtor, please give me a call, 860-428-6534. Your dreams are my job. Welcome to the Community Workbench. This is Matt Noren and Kyle Morrissey. We are your hosts of the number one podcast in my basement. At the bench, we try to repair the sense of community. So every week we bring you small businesses, entrepreneurs, community leaders, charities, and pretty much whoever we feel like talking to. And this week we feel like talking to Gerardi Insurance Hilb Group's Jay Long and Ed Morrisette. Welcome, guys. Welcome to the bench.
Yeah. Thanks for having us.
Yeah. So what's how do you want to start? Do we want to go through the beginning story of Gerardi Insurance? Is that something we want to kind of touch on, or even just your backgrounds and how you guys got started in the insurance industry? Can do that.
I'll give the original background, so you'd really have to trace it back, but 1917 is when Gerardi Insurance is traced back to. I wouldn't say it was Gerardi Insurance back then, but traces back to 1917, and then most recently was owned by the DeZonier family.
Yeah.
And we were acquired by the Hilb Group in 2021.
Yeah.
So it's been a little over 3 years now, and it's been great.
Yeah. How long did the DeZoniers own it? Because that was almost like second generation, right? They had two generations.
25 years?
Yeah.
Something like that. 25, 26.
Cool. Yeah, I actually, Mr. DeZonier, I remodeled his bathroom. Okay. And they're just always great people. Just awesome.
Yeah, and obviously they're still very much involved.
Yeah, that's great. So, Jay, how did you get involved in insurance?
Was friends with the DeZonier family.
Oh, okay.
That's how it all started. We were, friends from high school, or when I was in high school, and I joined. My wife actually started working there first, and then a few years later, I joined. I've been there since 2005 now. Started in personal lines, but then moved to commercial in like 2008. Ed kind of kicked me out of the personal lines market and moved me over to commercial. And yeah, been doing it since then.
So you write commercial policies?
Correct. Yep.
Going on.
All business type of policies.
And has there been is it on the job training, or is there other schooling that you have to do beforehand?
A little of both. I was licensed first before I got the job at Gerardi Insurance.
What's the license process like?
I forgot. Is it 200 questions on the license?
Yeah, there's a lot.
It's been a long time since I took it, but I think it's about 200 questions, and it spans everything. So it's all property and casualty, so personal lines, insurance, and commercial. And very nerve-wracking when you hit the button, whether you pass or fail. Like, you have no idea up until that point. It's like, bang, okay,
yeah,
great.
200 questions. It's a lot.
Yeah.
It gets blurry. You're like, did I answer them all right? I don't know.
Exactly. And they're asking some crazy questions that, when you're first starting in insurance, you have no idea.
Right.
So you acquire it over time. But then, then we have continuing education that has to be done twice a year, or every other year, I'm sorry.
Yeah.
And then both Ed and I have a designation, certified insurance counselors, which is a much more difficult designation to get. It's not just like getting your license, which is multiple choice. This is, real life situations, and you are writing out essays and giving your response as to why something's covered, not covered. And it's a process. It's a number of classes you have to take. You have to do it within a certain amount of time. So it's a great designation to have.
Wow.
It wasn't fun.
No.
It wasn't fun, but it's great to have it done.
Yeah. Pull that microphone a little closer. There you go. And Ed, how long have you been in insurance?
So I in May is going to be my 18th year.
Congratulations.
Jay's actually got a big 20 years this year in about another month and a half. So,
wow.
And I think that's, with our agency, you're going to see a lot of that.
Yeah.
Everybody's been there for 15, 20, Eric in our office has been there 30. Maxine just hit 45 years.
Wow.
So
That's awesome to hear.
the knowledge that our office has is it's outstanding.
I mean, obviously, you don't retain people without treating them well. So that's really cool to hear that, a local place like that just gets that kind of a deep bench, so to speak.
I think that's a big thing that goes into, when we were acquired, that was a big concern, right? Like what changes are going to happen. And the people that are in our office are the same people. And
Nice.
it's, we haven't changed offices or desks or anything like that. Like everybody's still there. It's not a different, there's nobody from Hilb corporate that is actually in the office, overseeing us or anything like that. We have our, anonymity that we can just do our thing.
Yeah.
And if anything, we've grown. We have new employees, but we also, one of the biggest things is now we have somebody that may be moving down to South Carolina, maybe moving to Massachusetts. Our capabilities now, we can actually
retain them.
Retain them.
State to state.
For sure. And then, even it's like that secondary home, we couldn't do that, 3 years ago. And now we have those markets in other states, which we didn't have before. So I think that's big.
Yeah, I mean, and that kind of plants your roots even deeper with your, now your clients only have to deal with one insurance company rather than, my house in Carolinas, I got to deal with another insurance company.
And they don't have to worry about any gaps in coverage either, where, if they have an umbrella that, the agent down, down south might have left something off or their liability wasn't high enough. So, that helps out as well.
Yeah. And what got you into insurance?
Believe it or not, I had a close friend of mine, Jeff Reiser, over at the Burns Agency. He came to me one day and he just said, "Hey, I really think you'd be good at this." So I was in the middle of like 2 different jobs, and so I went out and got the licensing and went to a couple different agencies. And when I went to Gerardi at the time, it just felt right. Like I knew that's where I was supposed to be. And I haven't looked back. I love it.
Yeah, truth be told, I've been out at events with you guys. It is a really fun, family-orientated group, especially when you're at like fundraisers and stuff, and we're all, drinking and, putting money in the hat and stuff. I think I remember quite the karaoke night.
I think there's been a few nights.
The celebrity karaoke nights there.
I think that's when I finally signed up for the show, right? We were out at the Sawdust. I think I had a couple. You might have had a couple. I think we finally said, "Hey, we should probably get this done."
Yeah. You actually came right up and said, I love your podcast, and that was just so cool to see. I love it when it's working. People are seeing it. They're seeing different businesses, and they're frequenting the different businesses when they might not have before. So.
And I think we work, what you do, what we do, it's like we work with these local businesses. We see them out, like you mentioned, these community events. Yeah. Like we're there, you're there. It's the same group of people. And I think everybody supports each other so much,
Yeah. I mean, sponsorship, like we sponsored the Brooklyn Little League, and you used to run the Brooklyn Little League.
Yeah, right.
So, my kids weren't quite into baseball yet when you were around, but I do remember like the T-ball year, which was painful. But you were the president.
That's when I got roped in. Started with T-ball and kept going from there.
Yeah. So my kids took a few years off, and then they jumped back in. But Gerardi Insurance is always one of the sponsors you see around the different sports leagues and. For the different charities and fundraisers and stuff, it's like Gerardi Group is there, and there's always like Ed's always. That's how I know Ed. I don't know if we would have met otherwise.
Yeah.
I think another big piece of that though is not just financial support, but like I was encouraged, right?
Right.
Like, hey, it's going to take up some of my time.
Oh yeah.
But that's not a problem, and you can be involved in the community and do those things, whatever they are that you're passionate about.
Yeah.
In my case, it just was great that it was something my kids were doing or my son was doing, so I got to continue to do it and be available whenever I needed to be available, because it obviously takes away from work.
Right. Yeah, it's kind of one of those things you help out when you can, and where it's like if your kids are playing a sport, it's a great opportunity to either coach or get involved in the committees or whatever that it takes to keep it going.
Right.
So that's like everything in the community is like got to keep all these things going.
Yeah.
So.
Yeah, I did that KBMF for the longest time, and it's funny nowadays though. like I'll get a call and it's like, hey, coach, I'm buying a house. What can you do? Can you help me out? And it's like, man, these kids are now buying houses. I'm like, I am so old.
You're old. Right?
I'm so old right now.
Yeah.
You know?
Yeah, that's I haven't quite had that experience yet, 8 years in. So we'll see. But yeah, it's and to be able to know the local insurance companies, because I get asked as a realtor all the time, like, oh, where do I go for home insurance? You know, because they have to have the book ready for closing and stuff, and you guys are really good with that, like following up with referrals and you know, the open communication about what's going on, especially if it's like a first time homeowner. They
I think that's like I think that's what makes, you know, the independent always different than the online companies. It's like the education part of it. It's like, hey, I'm buying a house and I have no idea what to do from this point. And that's where we try to, you know, as producers, walk them through. This is what you need to do. This is what you need to look for. This is the time frame, and you know, and kind of hold their hands a little bit. You know, you're buying a $300,000 house, and you know, you don't always want to go with the cheapest insurance policy with the, you know, minimum coverage. You know.
Yeah, and I was in a fender bender years ago, and you know, the woman got out of the car. She had rear-ended somebody behind me who hit me, and it was, I mean, my kids were napping in the back, and it woke them up. It was that light of a hit, and that was it. It wasn't like anything drastic, but it was when we got out. Like, my bumper was damaged. People behind me had like quite a bit of damage on their bumper, and she had damage to her front bumper. And, you know, she was like, oh, I'm fully covered. I just went through all that with one of the big corporate ones you see on TV all the time. And it was in Massachusetts. So her minimum coverage was $5,000.
Yeah.
I'm like, just this fender bender was well over 12 for damages. And it's like, so then I had to use my underinsurance underinsured motorist.
Underinsured.
Yeah, underinsured motorist to do it, or I had to sue her, which you weren't getting anything from that.
You'll pay more in lawyer fees. than
Yeah,
anything,
exactly. So I was just like, oh man, and that was one thing that like kind of always bothered me, is like how low that threshold is for liability insurance to be driving around. I feel like it should be like a minimum of $80,000, but
yeah, and it's different from state to state,
right?
You
Because
know,
ours is 10 in Connecticut, right? Or did they just bump that up?
It's bumped.
it's bumped.
It's bumped.
Yeah.
Okay.
Yeah.
25 now.
25.
Yeah.
All right, we're making.
But just think about how many, you know, new cars are on the road at more, or not new, just cars on the road at 25,000 or more. You know,
Right.
And property damage coverage only.
Yeah, just
if you got the minimum is 25,000.
Yeah.
just be careful what car you hit. You know,
Right.
So, you know, plan it out a little bit better.
One of my buddies in high school rear-ended an antique, like a $100,000 antique.
It happens.
Insanely rare car or whatever. It was just like a back fender or whatever. But he was just like, I'm not gonna live this down. It'll be on my insurance forever. So, so you guys are both in the commercial industry.
No, I do the all personal lines.
All personal
All
lines. So
personal
that's like the
insurance.
residential part?
Yep.
Oh,
yep.
perfect.
Home, auto, umbrella, motorcycle, you name it. Personal lines, and Jay does all the commercial.
Yeah. So, you know, kind of walk us through that. Like, as far as like you guys have, obviously like when you group it all together, so you have your auto, home, everything. Is that just having it with Gerardi, or talk to us a little bit about the wholesale?
Yeah, it really
part,
depends on the company. So we have companies that just specialize in home insurance or rental properties, right? And so, you know, they a lot of times will give you a discount if you have your auto somewhere in our agency. You know, certain other companies they want the full package. They want the home, auto, umbrella. They want it all, and then they give you those discounts for it. So I mean, it really depends on each company.
Yeah. So, and just correct me if I'm wrong, you guys are kind of like a broker for the wholesalers.
Yeah, we have over 20 different companies that we work with,
Right.
and it's good to have that because, you know, one of the things I've been working on over the last couple of years is more of the high value houses, you know, and so there's only certain companies that will go up to, you know, they'll only go, you know, a lot of companies only want to go to $1 million, but then you got these specialty companies that will go to $2, $5, $10 million houses, and we don't run into it often, but it was actually funny this year. I actually quoted like an $8 million house in California, and it was a learning experience to say the least.
Yeah.
And
Wow.
What's happening in California, I think kind of
Jeez.
yeah.
Oh, so you gave them an estimate and they didn't come back?
No, it was they were already with the company I was working
okay.
with, so they were in the right spot already. But it's just a learn. How many times once again around this area in the quiet corner are you running into $8 million houses?
Right.
So it's
rare.
It's still a learning experience.
Yeah.
and-
You have the castle in Woodstock. Well, that's like
yeah,
It's a lot more.
It depends on who you talk to as to how much that's worth.
well, it appears not to be worth anything to anybody because you can't sell it.
Yeah, but you don't know if he had offers on it.
Good.
But yeah, so like, why wouldn't a company want to cover the high end market like that? Why would they?
Well, it's some of the smaller companies, like you're taking a huge hit. If you have a loss on that,
for
say,
payout
yeah.
for claims.
They'd own the company.
There's a real long story, but I'll summarize a little bit on it. It's basically comes down to reinsurance. So insurance carriers actually buy insurance, and
Okay.
so they'll take the California wildfires as an example. Those carriers out there are purchasing reinsurance. So if the loss gets to, and I don't know the numbers, but let's say it's $100 million. So one national carrier will take the first $100 million of a hit of a catastrophic loss, and then reinsurance comes in, whoever they use for reinsurance, and they buy reinsurance throughout the world from different companies, and then those companies will come in. So they all have different contracts, and they all insure for different values. Like I know one smaller mutual company that we have, their reinsurance kicks in after a loss of $750,000. So they're only on the hook. You could have a house insured for $1.5 million. They're only on the hook for the first $750,000, and then reinsurance will kick in and pay the difference. But they're paying premiums on that.
It's higher for it's lower.
Correct. And so it's a spread of risk, and the more that they can take on, the more they can then insure themselves, or they have to buy more reinsurance. And then obviously you have that trade-off of, does it make sense? If we're charging you $2,000 for premium and we're paying $3,000 for reinsurance, we're not going to write it. So that's where they back away from those things, and they put those guidelines in place.
And those reinsurance costs have gone up significantly. So
huge increases, and unfortunately, I hate to be the bearer of bad news, but those will continue to go up.
Well, I mean, natural disasters just right. Everybody's got to bear the cost somewhere.
Yeah.
Correct.
Right. And so
And I bring up the point where, like, how often have we thought about wildfires in Connecticut, right? With the drought this year and the fires and stuff like it.
Yeah.
We don't normally typically think of that as being a possibility or flooding or those kind of things, but it's happened, and it's happened in Connecticut. So
Well, right at Halloween, it was a no burn. It was extreme danger or whatever, because we usually go trick or treating at a certain neighborhood, and everybody usually has a little fire going, and trick or treaters go up and hand out candy and whatever for the parties and stuff.
Yeah.
But there wasn't any fires this year, because
Yeah.
it was rightfully so. I mean, it was super dry. So my grandfather used to talk about that all the time, that we weren't really ready for a big fire in this area, and he would talk about that like 30-40 years ago.
Yeah.
And he just thought that we needed more firefighters and more access to water and stuff like that. So it was always
Speaking
a
of
big
access to water, right around here, there's not a lot of hydrants, right? There's certain areas that have hydrants, but then I don't have a hydrant on mine.
we don't.
I don't believe there's one. Yeah, so like there's those issues cost more to insure, because the chance for a loss, or a large loss, compared to having a paid fire department and a hydrant right down the street, makes a big difference.
Yeah.
There's people crunching numbers all day to come up with that stuff.
Are either of you guys actuaries?
Yeah.
we should be.
Right.
Do you guys have an actuary there? Or are they like at the Hilb?
That's with the carriers that we
Okay.
represent. Yep.
All right. For our listeners, please explain what an actuary is.
You guys.
It's a number.
Yeah.
It's basically
Oh,
just
it's
somebody,
somebody that
Assesses
crunching
ri-
numbers.
Yeah, you assess risk.
Oh, okay.
Yeah.
All right.
But they assess. There's a movie out there. I forget what the name of it is, but they were assessing risk on like this guy that was like a billionaire, but he did crazy stuff. Like,
Yeah, I remember that movie.
Yeah.
Shallow
It's-
how?
Is it? No, I don't think so.
No, it wasn't shallow how. Nope, it'll come to me.
But yeah, so they assess the risk of him like jumping out of airplanes.
Along
doing-
came Polly.
No.
Yeah.
No,
Ben Stiller.
Ben
It's got
Stiller
Ben
was a-
Stiller.
he
He was
was
the
an
actual.
actual-
Yes, it was.
yeah,
Right.
It was
yeah.
Ben
Right,
Stiller.
right,
There was
right.
something with Polly in the name, right?
Yeah.
Yeah,
And Jennifer Aniston.
Yeah.
He was like liberating him, cutting up his pillows and stuff.
yeah, but yeah, that was actually where I remembered it. But I just think it's a cool job.
It's true. I mean, the carriers have lots of actuaries, and they're crunching big data. Like, right? It's the more numbers they have, the more information they can get, the better and more accurate numbers and rates that they can give.
Is there like do they have like areas where it's like the safest place to live in the U.S. is here versus there? Is that like a thing? Is that something you guys would know?
Nah, I think it's like state by state. I mean,
It's state by state, and a lot of carriers use like some different programming so that they understand their spread of risk. Right? You don't want to write all on Main Street Danielson. You don't want to have everything because if there's one big loss that happens on Main Street Danielson,
Oh yeah.
you're gonna be on the hook for it all, right? So you want
Right.
to spread your risk out throughout Wyndham County or those types of things.
That's kind of nice to hear that you guys don't want to be a monopoly.
right?
Because there are some
there are-
companies out there striving for monopoly.
There are true companies that we've had that will kick back and say we can't insure that because we write
We already-
XYZ in this area.
Yeah,
Oh.
you already have
and you
some
see
of
a
those.
lot of that with coastal now. Like the companies, certain companies came in and they're like, yeah, we'll do coastal. We'll do it all day long. And we don't even need a wind deductible. And I was like, wow, this is going to last about 3 or 4 years. And then all of a sudden they're going to take a couple losses and say, well, maybe this isn't a good model. And so we're still seeing that right now where some of the companies are like, hey, we're going to pause business or we're going to slow business. And we don't want, because we're already saturated with so many policies in this area in Fairfield and coastal and those
Right,
kind of
right.
things. So you see that, from time to time.
Yeah.
You
Do you-
do boat insurance?
We do.
How's that work?
Yeah. I mean, once again, we don't specialize in it but in Hilb now we do have other offices that do specialize in it, and they can write $2 million boats to $40 million yachts. And
Is it similar to car insurance, like all the liability and stuff like that?
It's similar, but you still have different, different things that you could have the pollution piece of it, right?
Oh.
Think about whatever spills out into the ocean,
Yeah.
and then you're in some
Oh wow.
some serious
Yeah.
problems there, or you're stranded somewhere, or what's the towing cost of a $40 million yacht getting brought back in from wherever in the world, right?
Jeez. Yeah. Well, there's also, I mean, right in Southern Connecticut, we have a couple of yacht clubs or groups that to be part of that club, you have to sail around the world.
yeah.
Like, so you're in a sailboat going around the world, something happens, you got to bring it back or sink it and leave.
I'm actually learning a little bit more because I just took over. This is part of the Hilb Group piece, which is kind of interesting. So I've taken over as like a sales leader for a couple of other people outside of our office, and one of them is in our Cranston office, and that is all he does is high value yachts. Now I've only had 1.5 hour conversation with him, so I haven't
Yeah.
gotten to like really pick his brain, but he goes up and down the East Coast, going to every boat show, and he's like, yeah, I rub elbows with billionaires because that's what who
Right.
needs those those policies.
Right.
Wow. So it interesting. It's a lot for me to learn from
Yeah.
him because I don't know how much I can lead him in sales, but it's a totally different sale than selling a Main Street business or something like that.
Yeah. Yeah. That's a different.
But it's interesting.
Different
I
contract.
had a 12-foot boat one time. Maybe I'll just give him a
Yeah.
call, see what he can do for me.
Probably didn't even need insurance.
The premium's more than the boat. You want to walk us through some commercial stuff?
Sure.
mean-
I would say, and this goes along with the homeowner side of things, property insurance right now has been out of control. And that's like you talked about with the natural disasters and those types of things make it real difficult. So when we're going through businesses right now, if you own the building, if you own the building, if you have large property exposures, so that your contents in the building the loss of income. So let's say you had a fire. Obviously, you need to have coverage to recoup your income that you're losing while they're rebuilding the building. All those things are covered under a property policy, and those have been taking some really big increases, as well as auto insurance, which doesn't really help on the personal line side because you can see that there's homeowners insurance increases, auto insurance increases. So those have been hitting. But on the business side, you also have the general liability piece, bodily injury or property damage. Somebody slips and falls on your property, or, you manufacture a product and that product injures somebody. There's those types of coverages. Businesses get into more cyber liability, employment practices liability. So, I harass Ed and Ed brings up a lawsuit, and, that's, you got to have protection for that. Or if I, discriminate against somebody, there's coverage for those types of things. And then workers' compensation, obviously, is another big piece of the commercial insurance space.
Yeah, I was a contractor before I was a realtor, so those policies are tough.
They're tough, although in Connecticut, that is actually the market that has become the softest. So
really?
Rates have dropped considerably over the years
wow.
in Connecticut. Connecticut's always been high compared to surrounding states. Like Massachusetts has always been very low.
Yeah.
Connecticut hasn't touched Mass's rates yet, but they're getting there. They're dropping them down.
And is it because companies are practicing safer practices?
There's a little bit of that. There some better controls because people understand it a little bit more. I actually think COVID helped a lot because there was a drop in claims during that period of time.
Oh, wow.
And you were talking about actuaries. Those numbers, as they've trended maybe back up because people are back in the office or they're back working in the manufacturing facilities or whatever, they haven't really hit all the actuarial numbers yet. So on the books right now, it looks like it's a very profitable line of business. And so they're going to go to where the profits are.
Yeah, I remember it was like for the policy to be written, it was like $1,300 a year as a carpenter, and then
And that
33 cents on the dollar for it was 33 cents on the dollar for workers' comp for whatever I paid out.
Yep.
And then
For every $100 you paid, you paid 30.
and if I ever wanted to bump up to roofing instead of just repair, it was 55 cents on
Definitely
the
over
dollar.
50, yep.
So I was like, this is wild.
Yeah, that's down now. I would say the roofing's probably in the 30s now, and carpentry's probably 15 to 20.
Oh wow, that is wild. I would have never thought that would come down.
Yeah, but again, like I said, I think COVID really helped a lot of that, and other people just getting smarter and loss controls type of things.
Right, and even the products are getting easier to install, stuff like that, and the staging's getting more technologically advanced, where it's just more helpful. Plus, I feel like even like just the stuff you wear for cold days and boots that combat ice and stuff like that are just better.
Absolutely,
that kind of stuff.
Safety for sure.
Yeah.
When we were just talking about the property and we were talking about like wind in Florida and that type of thing, there's a great thing that Matt Dizonier in our office talks about where it's a picture of Fort Myers, like right along the coast, and it shows those that were impacted. And I don't remember which hurricane that had gone through at that point, but the two buildings left standing were the ones that were built the most recent. Because materials have gotten better.
Yeah.
We've gotten smarter, right? And obviously you can't go wipe out old buildings, but that you're going to see that, as building materials get better, we're going to adapt.
Yeah.
Why doesn't homeowners insurance drop then?
Because not all the homes are brand new.
Right,
Well-
but if you're trending in that direction.
Well, it's a you remember that was two of like,
Well, the same
strip
thing with
one.
auto insurance, right? I mean, like the cars stop when they automatic brakes and stuff like that now, but we're going the wrong direction for all that.
Well, Jay mentioned the whole COVID thing. I think everybody forgot how to drive during COVID because they stayed home so much. And, I speak at the Northeastern Driving Academy every, once a month, talking to parents, talking to students and stuff. And it was funny this past week I sat there and I'm sitting there waiting for the class to start, and I just watched 7 of the parents drive in the wrong entrance
Oh my
in
goodness.
front, and I'm like sitting there and I'm like, so the first thing I did when we went up there, and I Glenn Gay he's fantastic, and I I kind of made the joke. I was like, I hope you guys are learning from Glenn and not your parents, because 7 of them just went the wrong way. And, it was just kind of funny, a good way to start off. But you mentioned that, the advances in the cars. Well, unfortunately, though, when you go to fix those cars, that bumper that used to be 1,200 is now 3,000, 4,000. And, and one of the things I talk about all the time is the windshields, right? Because I have a Jeep, they break, it happens. And it used to be like $350 for a windshield. That same windshield is like $800 now. So inflation has caused a lot of that. And these claims have just, they skyrocketed.
Yeah. And you always got to think about, a lot of the stuff on cars is patented. So like, first 5 years that came out, it's patented. They have more of a profit on it when it's patented than.
Yeah, and everybody wants the OEM. They want the actual parts, and same thing with the Jeep. But like, I had to get a Jeep windshield. I don't know. I was just snobby about that. But
comes from the same place. Just put a different label on it.
Yeah, probably.
Do a lot of the commercial policies get like really custom? I feel like they would get more customized as to like obviously one business, even 2 different coffee shops could be totally different as far.
It could be depending on how they operate for sure. I mean, you could have one could serve alcohol, one doesn't. So that makes a difference, and I think that's a big piece. When we were talking about sales or Ed said, as he called himself a producer, and I always think like I am not a salesperson, right? I will go talk insurance coverage with you all day. I will bore you to tears pretty much because I can geek out, so to speak, on insurance where other people might not. And but the piece of that is to understand the business, and the more you can learn and partner with a business, the better off you're going to be. So I need to be that person that when you're thinking about, I am going to expand into whatever, making this widget.
Yeah.
I need to know that you're thinking about that, and I need to know what that widget is going to go into, so that we can make sure that you have the right coverages. Because you could have an exclusion on the policy for aircraft parts, right? And if you didn't think about it, but you're a machine shop and you just make these parts. Now this insignificant piece that goes into an airplane, and you get sued because a plane has a defect and it crashes, and there's millions of dollars, and everybody's getting sued, but you have an exclusion, so now nobody's even going to defend you.
Wow.
And so those types of things, we really you need that partnership to be like, okay, let's talk about this. What could be my exposure? And those are the types of conversations I love to have, because it's interesting for me to learn the business side of things. I'd love to go into a manufacturing plant and see how they're building something, because that's not how my mind works. But on the insurance side, I will, again, like I said, bore you on that side of things, because I like that part.
Yeah, that's pretty interesting. And so when, so basically, a company would probably try to take you on for like the life of it as they expand and as they get better and better.
Generally speaking, they would prefer to be on it and understand it, and get a good, our sales side of things is really to sell an underwriter on the company, right? I mean, on some of the smaller stuff, it's very fast, straight through. Like, we go online, we quote it, and we submit it to a company. But on the other side, if it's a bigger business or big manufacturer or something like that, even a contractor, we sometimes have to sell it. Like, listen, these people know what they're doing. They have the right safety protocols in place. They're buying that equipment to protect their employees. They have return to work programs so that they can get somebody that's on workers' comp back to the office sooner or back to the job sooner.
Yeah.
All those things. And then we're selling the underwriter. We're not actually selling the policy. We're selling the underwriter to make sure that we're getting the best price for that person.
Right. And the best coverage.
And exactly. Right.
Right. And make sure you cover everything to the finest detail so they don't have any exposure.
Correct. That way we're not missing something that they didn't know was covered or not covered or whatever.
What's like the largest company you've ever covered? Like, it's got to be pretty.
I was thinking earlier when Ed was talking about like where we can write now if somebody's buying a secondary home in South Carolina or Florida or wherever, and that's something we didn't do. We wrote a solar company years ago, and it's the difference from today and the resources we have compared to where we were then, we did a great job, I think, covering this company until they got bought out by a Colorado company. But we basically followed them down and got licenses in those states as we went down.
Oh, wow.
As they expanded into southern states, we just continued to get a license and follow along.
Yeah.
And again, I mean, coverage in New Jersey compared to Connecticut is basically the same thing. So it's not.
Oh, okay.
It's not like we were missing something along the way. It was just we weren't licensed. And now we wouldn't give that a second thought. If they bought multiple locations throughout the country,
Yeah.
we would just add them. And if we didn't have the correct market necessarily in our office, we have a branch that has that. So
Yeah.
we'd be able to reach out and partner with them to put everything together and just offer a much better package than we would have ever been able to do, before. And that's the great part about the resources we gained from, being acquired.
Yeah. I was just thinking, like, some of the manufacturing buildings that we have around here, some of them are new too, like with tons of technology and stuff. Is that like crazy, or is it like the premiums are small and it's like the catastrophic is huge, or how does that work?
Premiums aren't small. I mean, the premiums are large, but you can insure $40-50 million with the right safety in place and the right protection, so sprinkler systems and hydrants all around the facility, response time from fire departments, things like that. And you can get that, I'll throw out $100,000 for $40 or $50 million in coverage. And that's, I mean, there's a lot more that goes into that. That's a very simplified way of doing it. But there's a lot. And like you said, those manufacturing companies have all those machines inside that cost an enormous amount that you could almost not replace because they're built to make that specific part. And,
Right.
It's interesting. It's fascinating to go into them and work with those companies.
Yeah, my wife worked for one of the big plastic companies around here, and they have construders that they make the construder. Like, they don't, they don't get it from somewhere. They like make it because it's part of their patent or whatever they did with it. So there's like, you think about, if that ever got lost, or now what would happen with, like, do you guys cover things like espionage for that? Like,
so
someone
there is some patent infringement coverage that you can get. It's not all that.
It's tough.
It's
to
good
prove.
coverage. It's difficult. It's pricey, and there is a lot of background that goes into it.
Yeah.
Because they have to get lawyers involved pretty early on to understand the patent, what it looks like. Could it be? Is there something out there? And they're doing a lot of digging and going through the patent office, and so it is available.
Yeah.
The last time I quoted it, that we got one of the underwriters on the phone. He was a patent attorney and became an insurance underwriter. I don't know if that sounds like a good idea, but that's what he does. And wow, I thought I could, maybe potentially jokingly bore you on insurance. I was starting to glaze over as he was going through this stuff. But it was interesting in all the stuff that goes into that.
Yeah.
Again, very pricey, and it's there, but not enough people really jump on it.
Right.
I think it's very undersold within the country for sure.
Yeah. Yeah. And one other thing I think is wild is how few people around here have renter's insurance when they're renting.
It is so inexpensive. It doesn't make any sense. Like when I'm talking, $200 a year, you're, $15 a month. You don't have to pay it all in full. Like it really is. And, just because your contents aren't covered, and then, there's the liability part of it where if somebody slips and falls in your apartment, that kind of stuff, and then also if your apartment's damaged, you have to go, rent out another place. Sometimes there's some money for, security, down payment, that kind of stuff to really, get into another apartment. It's for $200.
Oh, wow. I thought it was on the landlord when they had to relocate people for damage.
Do they have some coverage?
You can potentially find a little bit of coverage, but typically no. The landlord is covering their own risk. Right. So they have loss of rents coverage, meaning if let's use fire as the example. There's a fire in the building, and they had 10 people renting there. It was 10-unit apartment. they're going to get the rent that they're losing for those 10 people. It's really on the landlord to be like, well, I'm going to help you out and maybe,
Oh, I thought they
give
had
a little
to.
bit, but they
legally
No.
had to put you up.
no.
No.
Huh.
Their loss of income.
At least on the insurance side, they do.
Yeah.
Yeah.
Oh, yeah. The other thing I'll say is I walk people through multifamilies all the time that are for sale, and I can't tell you how many tenants own pit bulls. This is like, do we want to try and tell the world, like, sorry, but if you don't own a home, you really shouldn't have a pit bull. I love the breed,
And even
I do.
even if you own a home, a lot of times, so there is an exclusion with, or most carriers in Connecticut will not. We have 2 that will allow. They have no dog list at all. But for the most part, one of the big main companies, I'll say it, but it's like State Farm. They're good with. They'll charge you for the pit bull, but they'll allow the pit bulls. We just. Most carriers
so much
don't
so.
because, and people are like, they're good dogs. And I understand they're good dogs, but they can't go by case basis,
Right.
And did a Chihuahua ever, rip your leg off? No. But, some of those smaller dogs are the most vicious dogs out of all of them. They just don't cause, the
damage.
the damage that a pit bull can. And it's not just that breed. And there's some,
Right.
I'm a dog person too. I love dogs. So
Yeah.
I kind of see it from both sides. It's
Yeah.
just,
The litigation wise, though, it is a cut and dry case. Your dog bites somebody, you are getting paid out, and your insurance company is the one paying. So if you're the landlord buying that multifamily property, you better put a requirement in your lease to your tenants to include that they have renters coverage. That way, at least if it's their dog, the suit is going to go to them. And yeah, you're probably going to get sued too, and your policy will protect you, but it's better to have that first layer of defense that it's their renter's policy paying for that.
Yeah. Is there a way to do like so if you have a building, let's say it's empty and you're going to fill it with tenants, that you can put in a policy there's no pets, right?
yeah, absolutely.
Does that help the policy, or do you guys cover it anyway?
I mean, if you have it in there and they broke that, lease, once again, what if they don't have, you can sue them. They'll get sued personally, but, I don't know if there's any, that's the importance of having the renters,
Right, but I'm just saying, like, as a landlord, are you still exposed, even though you have a policy of no dogs allowed?
You are not exposed if you. I mean, I guess technically there's an exposure, but you're much better off when you sign that application if you have in your lease that no dogs, and or the requirement you can't have a certain breed of dog or whatever. First of all, it's going to open up more opportunities for us because, like Ed said, there's 2 carriers that write homeowners policy that have a pit bull. We're very limited on what you can do. And then if you have that in place, at least that's the start. And then if something happens, that dog bites somebody, well, you broke the lease, right? And so now you have something on the liability side where you can be like, well, wait a second, I didn't sign off on that.
Right. Yeah.
I had that happen. God, this was probably 10, 12 years ago, where the insured said, hey, I have this dog. And, and it was a lab, right? And it wasn't a lab mix, but it was just a lab. And, they went out and did an inspection, and they said, well, that's a lab pit bull mix. That's not just a lab mix. And so, I, called the client, said, hey, you just need to get something from your vet saying that it's not. In the meantime, and it was a pit bull lab mix, but in the meantime, the dog bit a girl in the face, paid out $300,000. So, and the kicker part of it is they came and looked at my application, what I had in my notes and stuff. And I mean, I was grilled to the point where I'm like, I am never going to do this. Like, I need to know what kind of dog you have. So, currently, if you called me and you said, and I asked the question, do you have any dogs? And they're like, yeah. And I'll always say, hey, what breed? And if they do the first thing I do when I get off the phone is I look on Facebook and I look at your pictures and see what kind of dog you have, because I am so nervous of writing a dog that potentially may bite somebody that it just, it happens and.
Yeah. I would imagine if they start hesitating, like, okay, you have a pit bull, I'll just write that down.
People forget that. I mean, that's true with everything now. He's using Facebook, but so is every underwriter that we have, right?
Yeah,
It's
right.
not necessarily Facebook. I mean, if you're a business, they're searching your website. That's like the first thing that they're going to do.
Yeah.
And, you sell coffee, but you didn't tell me that you, I don't know, sell alcohol. That this wouldn't really be a
That would-
problem, but I'm giving you this scenario, and that underwriter is going to be like, well, what about this? And oh, well, I don't actually do that. I was thinking about doing it. Well, they're going to look at it that way, and you got to make
Right,
sure
right.
that you're not doing those types of things. So actually, a manufacturer is probably the best example because they'll be that machine shop and they make parts and they can make any part, right? And so, yep, my part goes into an airplane. Oh, the carrier looks at it and it's like, do you sell parts to any air manufacturer or air companies? And they'll be like, no, I've never done that. Okay, but it's on your website, and so the carrier immediately thinks you're doing it, right?
Yeah.
And,
Yeah.
So
Wow.
just think about those things because people are paying attention.
Yeah. Wow, that's like false advertising too, right?
Well, because you could, right?
Oh,
That's
but you
basically what you're
don't.
saying. You're
Yeah.
trying to improve sales by saying like, hey, we can make a part that goes into an airplane.
Yeah. I would think there would be some regulations and money you would have to spend to
But even
start manufacturing.
But even a homeowner's like where you have like a side business or you have like I do massage at my house. All right, so you have 15 clients coming a week. That's an extra risk that some of these homeowners
Yeah.
carriers just don't want to do.
Or they
you
have
know?
a business exclusion on the policy.
Exactly, and then something
really in
happens,
trouble.
and
Yeah.
And the same thing with outbuildings. A lot of times, you either rent out your outbuilding, or you store all your commercial, or you do work in that outbuilding. And a lot of times, like Jay said, there's a business exclusion there. So something does happen, and you burn that down because you were woodworking in that, and now you have nothing.
I constantly brought it up with my trailer. I have a trailer that's, a workshop.
Yep.
And I was like, this isn't just the trailer you see that I bought for $7,000. It's like 30 grand now.
Right. Right.
And it's just like, and I always brought that up, and they were like, yeah, well, it's all covered on this and on your auto insurance and stuff like that. So I was like, okay, as long as it's covered. And I've been with Gerardi for almost 2 decades now.
See, that's the key, though. We just need to know what's there. That way we
Yeah.
can make sure we're covering everything. It's that partnership piece. Like
Yeah. I always worry about sheds. Like, people put, $10,000 zero turn in the shed, like, and the shed burns down.
But
The
as
shed
long
was 3 grand.
but it's covered under other structures, and that that zero turns used to service the property, so you have coverage for that.
Yeah.
And so it's the problem is if once you start taking it off, like people buy those little tractors and they're like, I'm going to go down the road, and you and I are neighbors. We're about a mile and a half apart. If you drive
Yeah.
it down to my house and do some work for me, it's not covered. So
Right.
knock over a tree, takes it out in his house. You got no coverage on the liabilities.
I'm a really bad driver with the zero turn, apparently, in this scenario. So do you guys carry life insurance? And
yeah, I mean, we could do everything. We specialize in departments like Jay is commercial, I'm personal. We have life and health,
Yeah.
Medicare
So you
and
do
stuff
have
like
both.
that. So we all do it. I mean, or we don't all do it, but it's specialized in our office, and we do pet insurance. I mean, you name it, we can pretty much do it.
Wow.
For the most part.
I
I don't think there's many things.
Yeah, I don't know. If there's any
thing
real
that we
coverage.
can't do. I mean,
Yeah.
we might not specialize in it, but
Right.
there's a lot of times. Even I wrote a couple wedding insurance policies this year, and people you forget about it, and I'm like, well, you're spending 50 grand on a wedding,
On one day.
and what if the caterer doesn't show up? What if once again, you talk about local business that might have taken a hit, might have burnt down, or had a
Right.
fire and stuff like that, and now all of a sudden you can't have your wedding there, and so it's important, and those even a wedding policy is like $300 to $500 for that day.
Pretty
so
sure
do
we
it all.
got one. I remember Caleb being pretty adamant that we got one.
Mhm.
So, yeah. 15 years ago.
Congratulations.
How do claim, like if I wanted to switch insurance companies, but you have claims on your policy now, how much does that affect a new policy that you want? That's obviously going to weigh into it.
Yeah, I mean, and it depends on what it's. So, with the home claims recently, it's a lot harder. The auto insurance, it's fine. You have one or two, depending on how many drivers, how many cars, the frequency of it. If you had 3 claims in the last 3 years, the companies are going to be hesitant. I mean, there's always someone that will take you. It's just harder to switch. When I first started, it was, 3 years, and usually these tickets or claims would fall off. Now everybody's gone to 5 years. So you have a claim, it's staying on there for 5 years.
Even homeowner?
Yeah.
Or is that forever?
No, the homeowner's same thing. It's usually 5 years that a claim will
I find
stay
that
there.
interesting because, like, they could pay out, like, tens of thousands of dollars that they'd never recoup. And
Yeah, and you know what's surprising about that? And I don't know why this is, and it's one of those things, it's one of those mysteries I always find is like the moment that company pays out, the client is immediately shopping. I don't know why. I don't know. Like, hey, that company just paid me $50,000. I'm gonna go see if another company wants me. I don't know. It's one of those mysteries in life I haven't figured out yet.
Is there something to, though, if you have too many claims, the insurance company will drop you?
Of course.
So maybe that's
Yeah.
what they're just preemptively shopping because they're worried because now they're in some sort of risk pool. Is that what they call it? Is that
I mean, that's the job of a good agent, is to advise you, right? If you're calling me, you have $1,000 deductible on your house, and you call and you're like, wow, yeah, I just, this wind damage just damaged my front door, and it's going to be, $1,400 to repair it. Okay, well, you have $1,000 deductible. You're going to recoup $400 on this, and that's fine. That's what insurance is there for. You can put in that claim. The problem is that a second claim within 2 years, and maybe this one's a little bit more, it's larger, it's more severe.
Through the garage door by accident.
Yeah. I mean,
I can't tell you.
now
Homeowners
we're
do
getting
that.
to a situation where we might get canceled or non-renewed, and then we're going to struggle to find a spot for you.
Yeah.
So that's the big piece, and that's where we're going to do a good job of making sure we advise you on that.
I had that conversation today, actually, and it's something that most people aren't aware of. When you call us and you have that conversation, like Jay said, we're going to advise you, hey, you probably don't want to do this. Me personally, I wouldn't put in this claim for $400. You're going to profit $400 to get this taken care of. The problem is when you call the company directly, or if you were with a direct writer, or you call the company directly and you inquire about it, they immediately open up a claim. So now you have a record, instead of taking our advice and say, hey, it never shows up anywhere, and then if you do have that claim 2 years later, then fine, we put the claim in and you're paid out and you're not dropped. But, you show that history of just inquiries and stuff, they open up that claim for you. So that claim, just in case you put it in, is open. So now there's that history, and you just, this is the importance of going to your independent agent.
That's huge advice.
Yep.
Thank you for bringing that up.
Yep.
Because one of my questions was, so I'm with Gerardi. I have been forever. But if I have a claim with you guys, let's say homeowners insurance, then I go to someone else, and how do they know what my history is? How do they know that? Like, is it all in one big database?
There's a clue report. Yeah. So you run the clue
What's it
report, clue report on the property, and it'll pull in your history for claims.
So that always gets shared
Anywhere.
Is it like
It's
public?
like your driving record. Like
So-
it's like you go from Geico to Progressive, they pull in claims, right? And you
Yeah.
can see the claims. You can see your driving history, and Matt's got 3 speeding tickets and blah blah blah. It's the same thing with the homes. When you look around, that is knowledge between all the different insurance companies.
That is not the case in commercial, though. There's actually a couple of different things on the commercial side, because like where we're talking about 2 claims and it's not going to look good, or you talked about like paying out an astronomical amount. So on the commercial side, they actually look more at the loss ratio. So how much premium did you pay over a 3 or 5 year period, and how much did we pay out in claims? And that's where they're looking. So there's not this, on a homeowner's policy or a personal auto, you get a loss-free credit, so to speak. I mean, they're built in, but some companies will just advertise, oh, we get you this loss-free credit, which whatever, they all have them. Yeah. On the commercial side, you don't have that. So they're going to look at more the whole picture. And then, maybe you had, you're paying $100,000 in premium, and you had, I don't know, 10 claims over the year. And they paid out $10,000. Well, there's a couple of different ways as an underwriter that you're going to look at that. Number one, all right, the loss ratio is very good. We only paid out 10,000. We collected 100,000 after expenses. We're still making a profit. But on the flip side, what are those 10 claims? Why are we having so many claims? What is going on? Is there an underlying issue that we're missing? Because if we're getting just little claims right now, at some point the big one's going to happen. And so they underwrite it more than they do on the personal line side. Some of the small business stuff is underwritten more like a personal lines homeowners policy, but otherwise it's more the underwriter really digging into it, taking a look. One catastrophic loss, a freak accident, probably not the end of the world, because the carrier's going to be like, well, I mean, that's what insurance is there for, and that happens. You had that one big workers' comp claim. Well, okay, as long as there's not a reason for that nobody was negligent, it wasn't, somebody goofing around, you're, the manufacturing facility, and you're walking around on like racks way up the top and you fell or something like that. Right. Otherwise, they're just going to take a look at it and be like, okay, well, this can happen. That's what we're here for. We're here to pay losses.
Right.
And they look at it a little bit differently than the personal line side.
Do you think they'll ever do that with the personal line side? Sounds like a better deal.
Really, really tough. You think about a homeowner's. Let's take a fire, for example, right? I mean, if we have a home insured for $500,000 and you have a fire, a total loss fire, so you have $500,000 on the building coverage. We're just going to use round numbers. $500,000. Then you get all the contents. Now you're up to $750.
Right.
Now you got loss of use, so we're renting you a space to stay until we can get that rebuilt. Now we're up to maybe $850. All those things start to add up there. And you're paying $2,000 a year.
Yeah.
It could be a long time.
Yeah. Well, that's why I asked the question.
Yeah.
Like,
You have one.
Yeah, I
insurance,
mean, they
right?
bank on no claims, right?
Right.
I mean, people that are paying that don't have claims are paying for people that have claims.
Exactly, right. It's a spread of risk.
But I think the homes, there's more like the technology, the things that are going on right now. Like, I feel like an underwriter. Before I even write a policy, we have tools now, like the satellite views of your roof are so good. I look right down on your roof, and they update them twice a year. So I can tell what your roof looks like, what the insurance company. So all these, in my process is just to find out all the information up front to make sure I'm putting you in a good spot. But I mean, I think that's, you see a lot of that now. I don't write any house unless I know exactly what's going on, just so that, these things don't happen.
That's a big piece because inspections right now are crazy. I mean, anybody that's moving carriers, or you bought a new house. I mean, the inspections that companies are doing right now are crazy, and they're holding you to the smallest little things. I mean, it's frustrating on our side, and then if you're a new homeowner, that's got to be even more frustrating, right? Yeah, I just bought this place, and they told me. Well, we were talking about roofs before we got on here, and they told me my roof had another 10 years. Okay, but that's not what the insurance company thinks, right?
Do you think the inspector's the one that's going to pay it? The one that
Correct.
said it's got 10 years left is going to pay out the claim? They're not,
So are they independent inspectors that just go around?
Yeah, the companies
basically-
usually hire third-party
it's
vendors that will go out and do the inspection. They'll write up the report, send it to the insurance carrier. They contact us if there's any issues, and some of them are minor. I mean, a lot of times, there's like the bush is touching touching the siding, or you got a tree that's overhanging the roof or touching the roof, or there's some moss. We see that all the time, and those kind of things. The companies are going to give you time. They're going to be, hey, listen, we see this. It's not a huge deal. Get it done, before next renewal. And then they give us that time. And so we have that conversation with the client. Hey, no big deal. This came out great. Then there's other ones where like if there's a liability issue, you got the pool that's, doesn't have the locking gate, or there's stairs, that go up to the second floor and they don't have railings and stuff like that. Those are, or, we see a lot of times now the companies, They never used to do the interior inspections as much as they do now, but if you have that wood stove, you have that pellet stove, they're coming in. They want to see, and if you're not willing to do it, a lot of companies will make an exception. We need pictures, but they want to make sure that's installed and cleaned, and because you think about I feel like the last 2 years, for whatever reason, there's been a lot more fires than there used to be.
Yeah, I knew somebody that they had a beautiful barn in Putnam with a wood stove, and they wouldn't insure it. They said
Yeah.
you can't use it.
Yeah. They'll make you remove it,
Yeah.
and that's one of that once again narrows which companies want will take it, because you've been out there working in your shop and or whatever, and then you go inside and that wood stove's still hot or warm, and it just takes a little bit. And the other one that we've seen over the last couple of years that's kind of crazy is you just mowed the lawn, you're going to drive it right into the garage and park it. It's still super hot and, leaves a little bit of grass, and that's all it takes. We've had at least 3 or 4 fires that I know of just from lawnmowers. So now, me personally, I literally park it in near the garage outside, probably about 20 yards away, wait for it to cool down, then drive it into the house because I've run into this,
And
right?
if you have a leaf blower, just blow it off. Like before you put it in the garage.
Obviously,
I know
common
that.
sense, but
Well, no, I mean blow
Yeah.
blow the machine off, because
Yeah.
like mine collects it everywhere on
Yeah.
the deck and stuff, and sometimes you're getting done really late at night or whatever.
Yeah.
You don't feel like it, but that's that's the tough part. But if you have the
it doesn't take much.
if you
though.
have it like a leaf blower like right there, like an electric
Yeah.
one, just to blow it off, that kind of thing, or air compressor, just to
Yeah.
leave the grass outside. But
But it is
Eh.
amazing on how many there have been of just that one thing.
yeah, that
So,
one scenario.
yep.
Yeah, that's tough. So when you say the inspectors they're hired by like the wholesale insurance industry, like
Yeah, generally speaking, they're going to come from, say a Travelers, Allstate, State Farm,
yeah,
those types of companies. Yeah.
kind of come incognito, or do they?
No,
they
no,
announce-
no.
Yeah,
They'll introduce themselves. They'll
Unfortunately, they don't tell us that
Yeah.
they're going to go out there.
Yeah.
So, like, we
Oh.
get that complaint a lot. And I wish it would happen, but then we would also be overwhelmed with, the number of calls saying, hey, we're going to go out and inspect this property.
right.
So we don't have a great idea when that's going to happen. But generally speaking, if you write the policy, usually within 30 to 60
Yeah.
days, they're going to go out there and take a look at it.
and
Oh,
that's,
really?
and that's the thing about jumping ship every year. You know what I mean? Like you're opening yourself up, to these companies
Oh, so
coming
if
out
you just
there.
renew, they don't.
Yeah, they're not
really-
gonna. They'll
don't
come out every
generally-
5 to 8 years.
Yeah,
a lot of
something
times.
like that. Depends on the
Oh.
carrier, but
But
Yeah.
when you're moving from company to company, I think our account managers, by the way, are amazing. They've taken a ton of calls in the last 2 years, like on a daily basis. They're probably taking 10, 15. Hey, what should I do? Should I go to another carrier? And I know they do a good job of relaying that message. Hey, listen, as long as it fits, the roof's good, you take care of your property, it shouldn't be an issue. But if and you kind of feel out the client, like, hey, and they say, hey, listen, I know I have to do this, this, and this, and so maybe this is not the right time. But we do a good job of just letting them know, hey, they are going to come out, they are going to inspect. And one of the things that we found too this over the last few years is how many houses are underinsured.
Yeah.
And so to rebuild your house, 10 years ago was maybe $200 a square foot, $150 a square foot, and now the companies want 300, 350, depending on the age of it. So they're going to go out there and they're going to look at the house, and it's one thing on us, we want to make sure that your house is insured correctly, but some of these companies, they want higher and higher values just because they see what the payouts are.
Right. Well, also the materials spiked in
Crazy.
right in COVID, like especially lumber was crazy.
And that still really hasn't come down as much as
Right. I don't, and that was kind of the thing. Like, well, they're paying for it,
Yeah.
so they're not going to come down.
and shortages.
Yeah.
And then just and even that prolongs the time that it takes to rebuild your house, which has been a huge, we write a lot of houses that are under construction, and, the companies always gave usually 6 to 9 months, and then it went 9 to a year. And now the companies want that house built within the year, and when there's a shortage of different supplies and stuff like that, a lot of these contractors
yeah.
can't get the house built in time.
Right. Yeah, and that's another good thing to mention is like if you're a contractor out there and or somebody building a house, there are insurance policies for it while it's under construction, from taking it from a vacant lot all the way up through to
And the
finished.
sooner the better on that. Too many times, I actually got a referral from a local bank the other day, and the other agent that they were getting a quote from definitely didn't know or didn't ask the question about all right, what's the stage of construction? So On Ed's side, for sure, there's nothing in the homeowner's side once the construction has started. We can't put a homeowner's policy on it until it's completed then. Not that I know
Yeah,
of anyway,
no.
right? I can't think of a carrier that does. And then on the commercial side, I can be a little bit more flexible. Some carriers will allow us to write a builder's risk policy as it's going up. But if you're 50% done, 70% done, no carrier wants to start the policy at that point in time, right? Just think about it from a realistic point of view. All right, so we're going to collect $300-400 in premium, but we're going to insure this building at $1 million. It just doesn't make a lot of sense for them because it's going to be such a short period of time before it switches over to an actual homeowner's policy.
Yeah.
So the carrier wants to insure from ground up. Once you are going to dig a hole in the ground,
Okay.
start the coverage.
Yeah.
And then it'll be the most inexpensive for you at that point in time. You can get it for, they're very cheap. Again, it's a brand new house, so there's not a lot that can happen.
Right.
But I have seen brand new houses that burn, as they're being built or whatever. There's vandalism, something like that. Materials are stolen. All those things can happen. So it is important, but it's more important to get them early on. And we can write it both for the contractor or for the person that's going to be living in the house.
Yeah. Wow. That's great.
Yeah, the homeowner's under construction, so it's just your normal homeowners with like an endorsement on there, like under construction endorsement. That's on average like $200, and then once you complete the house and you move in, you just take the endorsement off. Your homeowner's policy's already there. We review it one more time, make sure you didn't add in a couple different things, high end granite or that kind of stuff. Make sure you have the right replacement cost on it. But besides that, it's pretty simple. But like Jay said, got to do it before you start building it.
Yeah.
And you don't want to be your own general contractor on the personal side.
Never. They don't like that.
Yeah, that kind of breaks my heart a little bit. I'm torn because I get both sides of it, but that whole culture. My dad built this house with his bare hands, kind of thing, and it's handed down generationally. You know what I mean? That's kind of like a
And that's where
really tough to
that's
do
where you do
now.
it on the commercial side, right?
Yeah.
We could write it as you're the general contractor, but if you're looking for that homeowner's side with the builder's risk endorsement on there, they don't want that because you could be my dad built that and it took him 3.5 years to do it because he did it at night when he got home and it dragged on, and that's what they're not looking for,
But on the commercial side, you would need a GC license, right?
The carrier actually won't look into it.
Oh wow.
Yeah.
All right.
Yep.
Nice
They don't
little-
actually ask if there's a
Little secret drop.
GC.
Really? Wow.
They'll ask the application will ask if there's a general contractor, but they don't dig into a license being involved.
Huh. Wow. I would have never thought that. That's not a great assessment of risk. What about all the tree companies? Like, do you guys insure any of those? What's
Sure.
that like? That must be
A few of them.
Yeah.
That must be
I
pretty.
just had one at my house on Friday.
It's like workers' comp for those guys. And believe me, I love tree.
It's less than
company.
roofing.
I worked for one. Really?
Yeah.
It's less than roofing. Up in a bucket. Well,
Yeah, it's much more select. There's only a few carriers that'll do it.
Tree climbing.
If you don't have a lot of experience, you're going to be stuck in the workers' comp pool. But yeah, there's coverage for it. There's the general liability side if you cut a tree and it drops on somebody's house or car or something like that. Those things happen all the time, obviously.
Yeah.
Well, not all the time, but they happen.
Yeah.
So yeah, they're there. Again, it's limited market. But like Ed was saying with the, we have 20 carriers. That's 20 carriers he works with daily. But as far as an actual number, there's some crazy stat that they say that the Hilb Group actually has for carriers that we have a contract with.
Wow.
It's just, those are all more specialty, and there's certain reasons you would go there as opposed to, the
the home and auto market.
The home and auto market that is in Connecticut that, we regularly deal with that are going to give you the most competitive rates with the best coverage.
Yeah.
We're not quoting somebody that we know is way out of whack, right? And same thing on the commercial side. It just depends on the business. We can find the right market. We certainly have access to it. Or if we don't, we have a broker that works with another 20, 30, 40 carriers that they're going to go to and see what they can do. So, yeah, there's a lot of market availability out there, that's for sure.
Yeah.
We're not limited,
Yeah.
Gotcha.
aside from like a State Farm, I guess, because they only deal with State Farm.
Gotcha. Now, what's Like you just mentioned broker. So what's like the difference between agent and broker as far as
Yeah, I said the word broker. I mean, some people consider us a broker, right? Because we're working
Working
for
with
other
other
companies. But we use wholesale brokers, so it's basically just an insurance company separate from us
yeah.
that has contracts with non-standard companies. So, like Ed was saying, the 20 that he's thrown out are like standard markets that we deal with all the time. But then there's what's considered excess, and the excess market, surplus lines market, it's a little bit different. It's not regulated by the state, so the they file paperwork with the state of Connecticut, but they don't have to file their rates, and it allows them to be flexible. So if you are a high hazard, you are making the parts that are going into the planes, you might be in this excess market, and they're going to be able to charge a higher rate. And then if next year they decide, you know what, this isn't working, we're losing money here, they can just bail out of the market and go, as opposed to a standard company who can't do that. If they're a licensed carrier in the state of Connecticut, they have filed rates. They can't just drop and just bail out for no reason whatsoever. They have to prove all this stuff. The state of Connecticut Insurance Department gets heavily involved in it, regulates it. They can't just say, oh, we took a beating this year and, we lost $10 million on this type of account or this types of business. You have to go to the state. You have to prove all that. You have to allow them to say, okay, yeah, I will allow a little bit of a rate increase to recoup some of those losses. Whereas if you're in that excess market, you can just pull out and say, we're not writing it anymore, because you're subject to laws in the state of Connecticut, but they're not the same it's not as regulated.
Gotcha.
But it allows for people to have coverage on high risk, tough classifications.
Yeah. Is the term bonded the same as insured? When I've had people, when I was a contractor, people asked me, are you bonded? And I said I was insured, but I didn't really, what's the difference between those?
Yeah, so bonding is totally different than insurance.
Oh, really? Okay.
Basically, bond is essentially that you're guaranteeing that something's going to be done. So if I'm a homeowner, I'm probably not asking a contractor, generally speaking, if I know anything about insurance. I'm not going to ask, are you bonded? Because you're not going to be. But if you are working for a municipality, say, you're doing work at a school system locally, those jobs, generally speaking, have to be bonded, which means that you are guaranteeing that you are going to perform the job and make all payments necessary. And that means you're paying your people, you're paying, all the materials, suppliers are going to be paid. There's no liens that are going to be put up against that property, correct?
Oh, okay.
And so that's the bonding piece, and that is not that easy. So a lot of people will think, oh, man, I need to get a bond. Okay, I need financials from you.
Yeah.
Because now basically the company is giving you a loan to say you are going to complete this job. If you have it's a $5 million job.
Yeah.
And we need to be bonded for $5 million. They're basically loaning you $5 million, so to speak. And you have to follow through and make sure that you get those things done. And the bond just is a much less expensive rate. It's usually, say, 3% of the job. Could be less if you do a lot of bonds.
Yeah.
But yeah, bonding is a little bit different. Another, a smaller example would be you're putting in a driveway. You can get a driveway bond. Those are very cheap. Those are not as big a deal. But the town might say, yeah, I want to make sure that when you're putting in this driveway that you finish it because it is up against our road.
Oh, okay.
So you get a $5,000 driveway bond, costs you $100. And if you didn't do it, the town would be able to recoup that $5,000 to finish your driveway.
Gotcha.
Or you finish at least the road part.
Yeah.
So it's totally different because it's very financial backed instead of, general liability policy for a contractor is going to pay bodily injury or property damage that you are legally obligated to pay because of your negligence.
Gotcha.
They're not, if you just do a bad job, you don't have coverage for that. They're not going to pay for you to go back and repair the roof that you did a poor job on and somebody doesn't like the way it looks. That's not what insurance is for.
Mm-hmm.
However, if it rained and the rain got through the roof because you did do a poor job and damaged the interior, now you have property damage that you were negligent for, and that's where the coverage comes in.
Gotcha.
Yeah. So generally speaking, on a personal side of things, or on a when you're dealing with like a home, you're not going to ask about bonding because it's just not generally done. It's usually on the municipality's work or large commercial jobs.
Yeah, I kind of wondered if they were asking the right term.
Yeah,
but I was
probably
always
not. A lot of
assured-
people throw it out there, although say bond or surety, just basically the same thing. Like,
Yeah, and then as like so many years ago, there was a lot of snow, and then there was a lot of contractors just started shoveling roofs for a living. Where does
Right.
that? How does that fall with the?
So that's a big thing with there's a lot of snow removal exclusions on
Oh, okay.
policies, on contractor policies. More and more, very few still cover it specifically. You have to buy the coverage back into the policy. Yeah, it's a big question, and like I said before, there was a little bit of a gray area in the way the policies were written. Insurance companies are smart; they're not just
Lost money.
correct.
It
They got
changed.
those actuaries that are doing all
That's
the work in the background, and they're like, well, wait a second, we're starting to pay this, and we're not collecting any premium for these people doing this extra work, right? I'm a landscape company that in the wintertime, I don't have anything going on other than, oh, I could go snowplow. Great. Let's start doing that. But now there's another exposure that they weren't, planning on before they didn't charge for, correct? So more and more companies do that, and then it's all about who you're doing the plowing for. If I'm just doing residential driveways, most companies are probably okay with that. They can add the coverage in there. Maybe it's $100, $200, $300. It's not a lot per year. But then we write a very large snow contractor in the state of Connecticut, and I actually, when you're talking about snow, like I get involved in, I write articles for what's called SIMA, which is the Snow and Ice Management Association.
Oh wow!
Yeah,
You
so
didn't know that was on.
we started getting involved in that because we wrote this big contractor, and they're plowing hospitals and they're plowing, large commercial.
I knew a guy that had the Bradley contract.
There you go.
Plow
Right.
All the airports.
Yeah, there's
Like
there's
all the
no exposure
runways.
there, right? I mean,
All the runways?
Yeah, right. It's no problem. That plane lands and just skids along, right? That's a pretty big lawsuit.
Yeah.
And yeah, so those types of things are very specialized, and actually, that's where you go to those excess markets because
It's
companies are
specialized.
in and out of
Yeah.
that market space a lot,
Mm.
and they charge for it.
Where did you go down for that? Where was the last place you spoke?
We've been down. Well, 2 years ago it was in Hartford. We got lucky, and then last year it was in Pittsburgh.
Yeah.
But yeah, I usually do a very riveting half hour to hour talk about snowplow insurance. So.
So this is like the second time you've mentioned writing articles. Do you like? Who do you write? Do you write for magazines? Is there?
Yeah, the SIMA one, they do a publication. It's not actually monthly. I think they do 8 or 10 a year. Yeah. So I do write an article in there. Usually.
And that's something that like just comes in the mail, or is it something?
Yeah, I think
or-
if you're a member of the organization, you get.
For snowplow
Yeah,
removal, you
yeah.
Oh, okay. So there's like a club for it.
Yeah. Oh yeah. I mean, it's a big, like when we go to the trade shows, it's packed. There's
I was gonna say
no
you met a
removal
lot of
contractors
contractors down there,
from
right?
all over
Yeah.
all
they
over
had
the country,
questions, and they were
and Canada.
I mean, you're liable for ice, right? Like you're doing sidewalks that people walk on.
You got to be aware of what the contract reads. I mean, these big box retail stores, they put it on the contractor a lot.
Yeah.
And our one big contractor that I was talking about, boy, they have a woman in the office that just, well, I mean, she goes back. I know that they don't have anywhere near the volume that a big box store has. I mean, she will tear them apart about like, no, I am not putting that in my contract. We're not going to do this. If it says, we have to be out there at 3 inches of snow. Well, if it was 2.5, she knows it's 2.5 there, and they're not going to be there, right? Like, I mean, she's great, and that's what you need. You truly do, because some people just get in over their head, and they're not realizing what they're signing.
Yeah.
And if they're not sharing that again with their agent and being a partnership, you're going to lose something because you might not realize that you probably shouldn't sign that contract based on what they're asking you to do and the liability that you're bringing on yourself.
Right.
Because it's basically, I'll throw out the name Walmart as an example. I mean, if people slip and fall, right? How many people go in and out of a Walmart every day?
Right.
And there are people that are chasing that, right?
Right.
Hey, I know
They
if I
trip
slip,
on
it's
a
$25,000 or whatever, whatever.
Dry,
number.
sunny day. And
Correct.
They
Do you think Walmart is taking on that risk? No way. They are passing that off to their contractor that's doing it, right?
Yeah.
And you might realize that you picked up, exposure because the contract you signed said from October 1st to April 1st, you're responsible for the parking lot. You think you're just doing snow plowing, and that's really all you are doing is salting, sanding, and that type of thing. But maybe it just in the contract it actually says you're responsible. So you trip and fall on a coat hanger.
No.
Now the contractor that does the snow plowing got sued because they didn't read the contract.
Would that be like a car accident too? Like
Car accident, I mean, that's private property. It's a little bit different, but I guess you could make a case for it. Sure. I mean, obviously they're going to try to bring in anybody they can.
especially if there was ice or
If,
something.
yeah, if it's a big claim, an
Yeah.
attorney's going to bring in whoever they can.
Wow. That's wild.
Yeah, it's crazy.
That's pretty cool how knowledgeable you are, though, on the whole thing. That's
The business
really,
side is cool because it just changes, right? Every
Right.
exposure is a little bit different, right?
yeah. And it's like it changes your idea of businesses that are just out there because they have to insure everything they do. And it's like you think about, oh, I just bought a coffee. It's it's there's so much behind him making that coffee, with insurance and all that stuff like permits, insurance, everything that goes behind the.
And you
something
think
is-
about like, okay, a contractor, yeah, this, I can get this person to do this work for me. Sure, he can, but this person might be a little bit more expensive because they're properly covered.
Oh yeah. Yeah, we ran
without
I
knowing
ran into
those
that all
types
the
of
time.
things.
Yeah.
I mean, my kids definitely, get bored or laugh at me when I'm talking about like we walk into a restaurant, you look at like you're looking up, you're like, is it sprinklered? Like, oh, that was pretty uneven surface. Different things like that. You're always paying attention to. The underwriting side doesn't go away. Just like you look at a house, right? You're always looking at
Every
like,
time I drive by that, I'm like, oh, I'd like to insure that. Nope, want to do that one. It's just
Yeah.
natural now.
right.
18
Believe me.
years of this,
Yeah.
it's kind of funny how your mind works when you're doing it now.
Yeah, my kids roll their eyes like, oh, I put a staircase in over there. I built that house over there. And then now I sold that one. Oh, yeah, we're going on a dad's career tour. Busts on me all the time about it. So yeah,
Oh man.
that's pretty cool. I mean, anything else you guys want to add into this? I mean,
From the home, the home and auto, the personal side, I think at this time, like, it's such a, the market's just different. So I think the mentality of the client needs to be a little bit different as well. We take on as much, we used to have things in place where we could reach out to every customer as much as we could. And nowadays it's just, we've taken on so many phone calls. I think like a little bit of patience, and one of the things I tell my clients all the time is when you get your renewal, don't wait till the day before to call us.
that's the conversation you had with me.
It might have been like, hey, I'm renewing tomorrow morning, and I'm like, what did they just mail you what did they just mail you your policies last night? It's and once again, I bring up our account managers. They bust their butts. They work really, really hard. They do a fantastic job, and the more time you give them, they're able to look around and they're able to spend a little more time, on your account and stuff. And and I had a client last week, and I bring this up just because it was amazing to me, and he had a hard time. His homeowners was the most outrageous thing I've seen in a long time. And before 2-3 years ago, when it was like a soft market and there's a lot, we would have caught that. We had things in place, and we were working on getting better all the time. But he was paying an astronomical, and he said, well, I said, one of the questions I had is, well, why didn't you call us? You got your renewal. Why don't you have a conversation with us? And he's like, I don't know. I talked to my friends, and they said that all their insurance was going up, so I didn't bother calling. And I was like, well, wait a second. It's case by case basis. Like, don't ever hesitate to call us to have us review it. Once again, you don't want to shop your insurance every 6 months, every year, but I tend to use my own experience. I look at mine every 3 years. But once again, our clients, they want us to do a good job, and I know, like I said, our account managers do a wonderful job reviewing and trying to get you into the best spot and also the best coverages, and make sure that if anything does happen, we got your back, and we know we wrote you good policies. So
Yeah, and every every piece of real estate is different.
Yeah,
So,
for sure.
So it's
The risk is different on every single one.
yeah.
You know,
and-
young kids, trampolines,
Yeah.
pools, like, you know, the age of your house. You know, there's so much that goes into it. It just takes a little bit of time.
for sure.
To piggyback Ed's comment though, there, you know, when he was talking about not shopping every 6 months or a year, and totally agree on the commercial side, underwriters pay attention a little bit more, and it's not necessarily just an online quoting thing. So, you know, if I'm shopping it around every year, the carrier eventually, and the carrier hasn't written it over, you know, for 3 years in a row, I've gotten to quote it, and that carrier didn't write it. They're going to look at it and be like, do I really want to quote this a fourth year? Like, why am I wasting time and, you know, resources into doing this?
Yeah.
So it's important. And that's why, like, we're going to have a conversation with you. We know the market. That's our job. And so if it doesn't make sense to shop it, we're going to let you know that, or be like, you know what, this year, I don't know that they're that competitive. We're not going to go there. We're going to wait until maybe their rates change or whatever, and we can get a better, you know, coverage in place. And I think another thing he was talking about, it's all about education. And, you know, I mean, that's my big piece on things, is educating the customer, educating, you know, who I'm talking with. I mean, you're talking about the, you know, homeowners and where the markets are and all that. And we just want to have those conversations. You know, pride of ownership matters when you own a building. It does. I'm sorry. And I know that some people don't love that, but that is the way it goes. And, you know, those things make a difference. We can do a better job for you when you take pride of ownership. You know, in a business, if we're a partnership and you're going to let me know what you're going to get yourself into, then I can help make sure that we're protected and we're not missing something. And so those things are they're huge. Education is a big piece of, you know, what I like to do for sure. And what our agency tries to do is educate our customers.
Yeah, I'll reinforce that idea with, you know, just reading. There's so many people that don't read contracts. They don't read, and you're doing stuff like buying houses, getting insurance policies. And even as a contractor, I had a lady whose back roof was leaking. Well, it turned out that it was part of GAF's bad batch back in with the early 2000s or whatever, and it was literally deteriorating within like 5 years of being put on. And I had to read their entire warranty policy, everything, and there was so many loopholes. They weren't paying for that roof. I was like, and you know, it ended up being an insurance claim, and I had to replace the back half of that roof. But it was like, it was a nightmare because there were roofs that did qualify, and it was like GAF qualified installers, which it was just some overnight roofing guy that, you know, threw it on, and it was just the product was deteriorating early, and they had like certain die lots that were malfunctioning or just deteriorating. It had a bad chemistry in it or whatever it was, and they had replaced a ton of roofs, but there was like certain loopholes in that warranty that didn't make it. And it's kind of like insurance is kind of like a warranty, you know, and now with applications on or apps on your phone, there's all kinds of terms and stuff. And I know it's like, I don't want to read that, you know, but like I've started to get used to it because of, you know, contracting and writing contracts or filling out contracts, that kind of stuff. So it definitely, the education thing is huge. And then working with someone over time, like insurance agents, or, you know, having a constant contractor, or, you know, constant electrician, that kind of stuff, it really helps to have good relationships with the people that keep your home together,
Right.
you know, keep
A
your
partnership,
lifestyle together.
right?
Yeah,
Yeah.
partnership.
Yeah.
So yeah, I can't thank you guys enough. This has been
This is awesome.
so
I appreciate it. Yeah.
enlightening.
This has been great.
Thank you guys so much. Appreciate you coming out. Thanks everybody for watching. Join us next Monday, January 20th, when we talk to Dylan from Daigle Farm, who is simply growing food. We'll see you next Monday. As always, buy local, hire local, dine local, volunteer local, donate local, get insured locally. Have great days.